Well, howdy there folks, and welcome into today's video. Today I'm going to take you through the top 5 stock market mistakes that I see beginners make all the time. Things that you need to avoid, because if you avoid these things, 1, you'll probably not lose money, and 2, you're going to likely make way more money in the stock market by avoiding these different mistakes. And I remember back to when I was in the stock market, when I was just getting in 2008, 2009, I made some of these mistakes, okay? Definitely in my first few years. I didn't really have anybody to teach me, so I had to learn all through trial and error, right? And then for instance, in my private stock group, I would say 50% of the members that join in there, about half of them have been investing for less than a year. So I get to go over these people's portfolios over time. I get to see the mistakes they're making essentially. And there's definitely a lot of mistakes that newer investors make to the market, and it's natural. Whenever you get involved with anything that's new, you're gonna make some mistakes. So I hope this video helps you guys hopefully either not lose money or it helps you make way more money in the stock market. So I hope you guys enjoy this. As always, hope you get a tremendous amount of value. If you don't mind, smash a thumbs up. That helps us out in the YouTube algorithm. I appreciate all you guys so much that are part of the thumbs up squad. And if you want to join Stock Hub, it's absolutely free to do so. That's going to be linked in the description. That's the best and biggest free Discord chat for stock market investors out there, guys. And without further ado, let's get into this. Alrighty, guys, first mistake up here that I see stock market beginners make all the time is they sell their stocks too dang soon, okay? And oh my gosh, this happens so often to newer investors in the stock market. It used to happen to me all the time. Heck, it still even happens to me. I've been doing this for 100 years. It still happens to me sometimes. But I can tell you, when you're new to the stock market, this happens all the time, okay? And basically what happens is people will, make a bull case around a stock and they'll buy into it. And they're like, I believe in the stock for the next 3, 5, 7 years or whatever, okay? And then the stock goes up 20% and they cash. They cash out. They take their profits and run. Why? Because they're still having confidence issues a little bit. And although the stock's gone up, they aren't really letting it run. You got to understand, some of these stocks, if you're getting in truly great growth companies, for instance, some of these stocks can run sometimes hundreds of percent. And so to all of a sudden sell out of with a 20% gain, it's are you really making the best decision? A lot of times you're not, okay? And so for instance, Tesla stock's a really good example of this. Tesla, obviously I was investing in that stock heavily, it was a couple years ago now. I think it's 2019, okay? And the stock price was, really, really low compared to where it's at now. I think the stock's gone up 1,700% or something like that since then, okay? But a lot of people that were new to the stock market saw Tesla and they're excited. But the problem was they went ahead and sold way too soon. It went up 20% and they sold. A lot of people sold when it went up 50%, its first 50%, and they sold. And obviously those people regret that horribly because the stock ended up going up, 1,700% or whatever in the last couple of years. But people were selling too soon just because they had seen the volatility in the stock. And so they were like, maybe I'll time it out because it's been going up and down. So it went up its first 20, 30, 40%. And they're like, okay, let me cash out because it's going to go back down. I remember looking at messages, looking at YouTube comments that said things like that. Even in my private group in the Discord chat, there were a few people back then that were like, yeah, Tesla stock it's went up 50%, but I just cashed out of it because it's going to go back down. Watch. It never went back down, and it just went up and up and up and up and up. And then it had a little dip when the market went down, and then it went up and up. And you know what I mean? So it's too hard of a game to try to time things out. And like I said, usually it's not even people trying to time things out in terms of let me sell out. It's going to go down. I'll get back in for cheaper. A lot of times it's honestly just confidence issues that they just don't have the confidence to stay in some of these stocks long term. And it's man, I always like to say this is a great expression. It's you can chase the breadcrumbs or you can chase the loaf of bread, okay? And if you're staying in these stocks, to let them play out, you're chasing the loaf of bread. If you're just trying to be in the stock for a 3%, 5%, 8%, 14% gain, you're just chasing breadcrumbs, in my opinion, at the end of the day, because great companies should make you hundreds of percent on your money, not 14%, okay? So that's the way I really view it. And yeah, don't make that mistake because I'm telling you that will cost you so much money by selling some of these stocks too soon. If you own truly a great stock, you shouldn't even have to worry about selling it in any quick amount of time, okay? Alrighty guys, let's get into number 2. Alrighty folks, the second huge mistake that I see stock market beginners make in the stock market all the time is this one, okay? Not doing full research around the stock. And this hurts two different ways, okay? And when I say doing full research, I mean reading the 10K, otherwise known as the annual report, listening to conference calls, like listening to investor presentations in regards to the company. All this is available, like it's so easy nowadays. Everything's available on an investor relations page. Like if you want to look into a company, let's say you want to look into Apple, okay? And you're thinking about buying Apple stock. Literally, you type in Apple Investor Relations, and boom, you're on their investor relations page, and everything you could have ever wanted on there. The conference calls are on there, the investor presentations are on there, like the annual reports, the quarterly reports. Like nowadays it is so easy. There's no excuse for not doing the full research around a stock, okay? And it hurts people so bad by not doing the research, okay? The full research. One, they get in really, really bad habits, okay? And when you're new to the stock market, you want to get in good habits early on. You don't want to try to start cutting corners right away, because if you start cutting corners right away, guess what you're going to do next year and the year after? You're going to cut even more corners likely, and you're just going to put yourself in a situation where you're not going to be in a position of power when it comes to stock market investing, because you're just trying to cut corners all the time. You don't want to be in that, okay? But there's two huge reasons. So first is, if you're not doing your full research, the probability you lose money in that stock goes up substantially. And I mean absolutely substantially. And I'm not just talking about the short term. I'm talking about potentially losing money, over the coming years in that stock. Because if you're not really doing the full research, like how do you really know it's a great stock? Do you really know its financials inside and out? Do you really know that company's vision? Do you really know that company's competitors? Like, are you even keeping up with all these things? Like if you're not doing the full research, like I said, the odds you're going to lose money go up substantially, okay? Especially if we're not in like a booming bull market. If we're in like a stagnating market, or dare I say a bear market, and you're not doing your full research, you're really gonna be in for it, okay? So absolutely, positively, make sure you're doing your full research. The second part is, remember we just talked about selling too soon, okay? One of the big reasons a lot of people sell stocks too soon is because they haven't really done the full research, so they don't really understand how big of an opportunity is for that stock in the future. And so they got excited about a stock, they bought in, it went up a little bit, and all of a sudden they cashed because they didn't really understand how big the long-term opportunity was for this company, because at the end of the day, they didn't really do the full research into that company, okay? And so if you want to make a lot more money in the stock market and you want to decrease your chance of losing money in a stock if you're investing over 3-5 years in a stock, do the full dang research. I always get this question from folks that are newer to the stock market, okay? They always ask, like, what's the order of doing the full research, okay? This is what you want to do in order, okay? First, like, look into the base profile of the company. Well, so what is like their base things about the company? You can look at that like Yahoo Finance. Are you intrigued? Okay, now to the investor relations page, go ahead, read the 10K/annual report. If you like it from there, things are starting to make a little bit of sense to you, then we can go ahead and we can move on to the latest conference call. And we can move on to the quarterly report, investor presentations, then we can start Google Newsing different things about that company. Then you can start looking at the valuation, you can start looking at the share statistics, the market cap, the forward PE, all these things, okay? Do your research in that order. And if you didn't get that, rewind the video, watch that part over again, okay? That's how you do the full research. Extremely important. Like I said, the odds you're going to make a lot more money go up substantially, and the chances you're going to lose money over the long term go down substantially when you're actually doing the full research. Let's get into number 3. Alrighty guys, the third mistake that I see so many beginners in the stock market make all the time, okay, is buying way too many stocks and getting way over diversified. This is ridiculous, okay? So I do like these portfolio reviews in my private group. I do these like, pretty much almost every week now, okay? And people get to send me their portfolios and I kind of get to look over them. And what I see consistently from newer investors in the market is they own way too many stocks. They're all over the place, man. I mean, there was, last night I was doing portfolio reviews, and I think I was a person in there that had like, I want to say like 38,000, and they owned, I want to say like 45 stocks or something like that. Like, at that point, just buy an index fund. I mean, it's just like your money's too spread out across the board with that amount of money, okay? I mean, for my particular investing philosophies, for most amounts of money, I like to hold 10 stocks or less. When you get over $1 million in the market, you can maybe get up to like 15 stocks, maybe even pushing close to 20 stocks if you're at multi-millions of dollars invested in the stock market. But for most folks, they're not at that. For most folks, they're at around 100K or less than 100K invest in the stock market. And if you're at those levels, like 10 stocks or less than 10 stocks is usually appropriate for you. You don't want to get super over diversified. And it's just a consistent pattern I see that, newer investors, a lot of times what it comes down to, okay, is this. They aren't very confident. And so because they're not very confident, they don't want to put too much money into any stock because they don't want to, basically take that risk. So they just start buying all these different stocks. And the problem with this strategy is, how can you possibly tell me you like stock 37 in your portfolio nearly as much as you like stock number 1 or stock number 2 or stock number 4? Like, give me a break. Like, I love a lot of companies out there, okay? But I can tell you there aren't 37 stocks in the stock market right now that I love their valuation, okay? And that I would gladly buy. There's maybe 5 stocks right now that are out there that I'm like, that stock's at a really good valuation. I really love that business. It's worth a buy right here, okay? And so, watch getting way over diversified. That's going to be another thing that ends up costing you way more money is, you don't want to get under diversified and let's say just have all your money in one stock or something like that, because all it takes is that stock to go down. You made a mistake, which everybody can make a mistake. Even if you do your full research, sometimes you're going to make a mistake in the market and you're just going to pick a bad stock. It even happens to experienced investors like myself. Heck, it even happens to Warren Buffett sometimes. Warren Buffett's been in the market for since the beginning of time, and that guy still makes a mistake from time and time again. You're going to make mistakes sometimes. So you don't want to get, all your money in one stock or something like that. But at the same time, holding a crazy number of stocks, it's gonna hold back your gains in a big way. And it's just not the right type of strategy for me, okay? Like I said, you want to hold 1 million stocks, just buy an index fund. That you can do that, okay? Like I said, that's not my strategy, but hey, respect, okay? All right, guys, let's get into number 4. Alrighty, folks, the 4th mistake I see stock market beginners make all the time, super important one, okay, is distraction, okay? Distraction. So, long-term investing is the way to go when it comes to stock market investing. That's what works for the masses. Long-term investing, looking at companies multi-years out, making investment decisions based upon business decisions, not based upon chart patterns or, whether the stock's gone up a bunch or down a bunch and things like that. And just, some people like to think in just the terms of all these arbitrary things. It's be a business person, be a businessman, be a businesswoman. That's what all the people you ever looked up to that have crazy amounts of money, multi-billions of dollars, okay? All that make business decisions every day of their lives, okay? Not trading decisions or all the other crazy stuff people get into, but distraction, okay? Short selling, day trading, swing trading, options, all these things, they really have no place for stock market beginners. I mean, most of them don't have a place even for experienced investors, okay? But certainly not newer investors to the market. But all these things are grabbing you, right? And you're seeing an ad on YouTube or wherever about some guy made 1,000% on an option play or something like that. And you have all these alluring things trying to distract you and trying to grab you and pull you over here, and you're just gonna say, okay, no, I'm long-term investing here, leave me alone, okay? Imagine you're walking through a room, okay, and back there is the woman of your dreams or the man of your dreams, okay, depending on who you okay, and they're in the back of the room over there, and they're the person that is going to help you live the most happy and fulfilling life, and they're back there. But meanwhile, you've got to walk by all these other people that are super attractive, and they're saying, hey, come over here, come have some fun with me. And they're pulling at you all along the way. And you're just trying to get back there to that person that's going to lead you to the happiest, most fulfilling life. But you have to go through all these other people grabbing at you and saying, come over here. No, don't worry about them. Come over here and have some fun with me. That's the stock market for you at the end of the day. You're trying to get to that holy grail back there, which is the land of happiness and the land of fruits long term. But you're going to have all these other things trying to distract you. But what happens is not everybody can fight all those distractions. And they get pulled in with this one over here, and they get pulled in with that one over there, instead of focusing on where they need to go. And long term, it is not things that work out for most people. Like 90% plus of those folks end up losing money in a lot of those different strategies. Like I said, most experienced investors have no place like anywhere around those things, never mind newer investors. And a lot of times if people do make some money in there, they actually way underperform if they just focus on long-term investing. And so usually, like the high majority time, it ends far worse than it would have ended better for them. But the distraction's alluring, man. And short selling, you know, oh man, that looks really attractive in a market that's going down and down and down. And it's like, oh man, I should just start shorting stocks. Woo-hee. You want to talk about ways you could lose a lot of money, more money than you could ever dream. Start short selling stocks and see what happens, okay? Or a lot of people shorten stocks heavy March, April, May because they were like, oh, the market's going to go back down. It's going to go back down. Look at all this bad news. Those people lost so much money, I can't even explain it to you. I mean, a lot of them ended up leaving the stock market in general because they ended up getting hurt so bad, okay? So watch for the distractions. Remember, you're trying to get to the real place back there. And there's going to be all these things along the way, along that hallway, to get to where you're trying to go that are going to be tugging at you. And it's your job to fight those off and say, not today, honey. Let's get into number 5. Alrighty, the 5th and final mistake that I see stock market beginners make all the time when it comes to stocks is they believe more in others than they do themselves, okay? And they you know, when I'm talking about this, I'm talking about bullish theses, like actually buying into a stock. They'll read an article online. They'll see a guy talking on TV. They'll see a guy talking on YouTube, whatever. And they'll buy the stock based upon what that person's opinion is. Not really based upon their own opinion and their own research in that company, just based upon this other person's opinion, okay? Now, that's another thing that's gonna not be good for you long term as a person in the stock market, okay? One of the best things about the stock market is taking your money into your own hands, right? Most people, they don't have any money invested in the market, and most folks, if they do have money invested in the market, it's just in like a 401k or index funds or things like that, not like they're actually picking the individual stocks, right? And so one of the beautiful things about stock market investing and actual stock picking and building out a portfolio of stocks that you picked is that you picked them. But if you're just going based upon what the person on social media says, what the person on the television says, what the person on the internet says, whatever, you're not making your own true investment decision. You're just saying, well, this person's buying it, so I'm buying it, okay? I have a tremendous amount of respect for Warren Buffett and for others in the stock market, but obviously that was my guy when I got in the market, especially, and still this day, like if Warren Buffett did a 3-hour interview on CNBC, I'm watching it because I love Warren Buffett. I got so much respect for that guy. He's like 90 years old now, but man, I got so much respect for him. I'm gonna watch the whole dang thing from beginning to end, okay? But at the end of the day, if Warren Buffett says he's buying a stock, I'm not going out there and buying that stock just because Warren Buffett is. And I got respect, more respect for him in the market than anybody else. But I'm not doing that because I want to put my money in the stocks where I want to put them. If we happen to invest in the same stock, fair play. But just because that individual is buying it, I'm not saying, well, Warren Buffett's buying that. I love that guy. He got so much respect for him. I'm buying that. No, okay? Make sure you're doing your own research, okay? Your own full research in making that investment decision. And at the end of the day, what happens is a lot of times people will buy into a stock just because they heard somebody online, on the television, or wherever. Or maybe a friend, family member says, oh, buy this stock. And so they go and buy that stock. And they're like, oh, they put $5,000 in there, okay? And then what happens is that stock goes down. It goes down 5%, 10%. And you know what that person ends up usually doing? They sell that stock because they're like, oh my gosh, I'm losing money. I'm losing money. What the heck's going on? That person must not know what they're doing. And hey, did you know there's volatility in the stock market? Sometimes these things don't work out, right? Whether it be long term or short term. A lot of times, sometimes the market just gets rough or a particular stock gets rough and it doesn't go up for a little bit. And it takes a while for it to go up. But at the end of the day, people end up selling for losses because they were never even really the one that believed in it. If you do your full research and you understand that business on a very high level and the valuation and what they have coming for them over in the next, let's say 3-5 years or whatever, right? It's much easier to make that investment decision. It's much easier to, buy more of that stock, dare I say, when it goes down, rather than sell out of that stock for a loss. If you really understand that business, but the problem is, people just making judgments based upon what other people are saying and buying and doing things like that. And so, if that stock goes down, they end up selling for losses rather than potentially buying more. And if they had just done the work, maybe they realized that wasn't a good stock to get in anyways, or maybe that is a good stock to get in and they actually need to buy more rather than sell out, okay? Always believe in yourself more than others when it comes to actually picking these stocks and putting your hard-earned money into these different stocks out there. So hope you guys enjoyed this video. As always, like I said, if you don't mind, smash the thumbs up. This should have covered, definitely the biggest mistakes I see consistently from the time I've been in the stock market that, folks make out there. And leave me a comment if there's ever a mistake you've made in the market. I'd love to hear from you guys on kind of what that mistake was. So hope you enjoyed this. If you want to join Stock Hubs, absolutely free to do so. If you want to apply for my private stock group, I don't even have it up there, but anyways, it's probably in the description somewhere down there. Thank you for watching. Have a great day.